This is a Brooklyn-bound 2 train. The next stop is Wall Street.
Stand clear of the closing doors, please.
Welcome back. Happy Friday. This is Not Your Advisor with NYU Grad on May 2nd. What a way to end the week and start the month. This has been the longest S&P 500 winning streak in history. We are living through basically history together, whether it's, I guess you can call it the tariff crash of 2025, and now this winning streak. May also has Memorial Day at the end of it. So everyone right now, those that are in position, are getting ready for end of month Memorial Day festivities, whether that's the Hamptons, whether that's Lake Tahoe, whether that is Lake Como in Italy. And the adage is sell in May and go away. But maybe this year it's sell in May, no way, Jose. We have to see, because there are two ways to look at this action right now. And I'm sure you've heard this from many advisors. If you sell, you'll miss the biggest gains and potentially the longest winning streak in history. You might have missed it if you sold. The other way to look at it is if you held from the top, you're down about 9% from the peak. So we're in a precarious place where it could potentially be setting up a trap for both sides of the trade. But let's jump right into it. Looking at breadth, it was a very positive day. We had 342 new highs versus 76 new lows. If you've been following me on this podcast, you know that the new highs have been beating the new lows every day for a while now. 76% of stocks were advancing versus 20% declining. 46% were below the 50, which is a big improvement. Just a few sessions ago, we were 70+% below the 50-day. And 66% were below the 200-day. All indices closed green. Dow up 1.4, NASDAQ 1.5, S&P 1.4%. Bell to bell buying. And this is off of the back of the Microsoft and Meta earnings, but as well as the whispers that China may be coming back to the table to negotiate tariffs. That's the real reason why markets are higher. So we're at the whims of headlines right now. But looking at mega cap, there was two red Mag 7. Apple was down 3 3/4%. Amazon was down marginally 0.12, pretty much a nothing burger. But Microsoft was up 2.3%, Nvidia 2.6%. Tesla 2.3, Meta 4.3, and Alphabet/Google 1.8. Looking at the groups or sectors for the week, everything was green, and for the day, everything was green. Well, for the 1 week performance, energy was down 0.38%. That was the only loser, but green everywhere. I'll post that in the show notes. A couple other things that stuck out to me, right? And I'll also include these ETFs for the indices in the show notes for free members. But just walking through it with you via the microphone, the Qs. So if you take a look at the entirety from peak to trough, we're just above the 61.8 Fibonacci retracement level. We're above the 50-day, but we are literally at the 200-day moving average. If we can get above the 200-day moving average with conviction, with volume, and stay above it, that will be very constructive to the bulls and for upside momentum. If I see that myself, I too will get aggressively long. Right now, I'm 50-50 position right now. I have no FOMO whatsoever. I'm not trying to chase like a lot of people who are texting me in my network saying, oh, you got to be in TQQ, which is the hyper-levered Qs. I'm not playing that. I've already made my profit for the year. I'm trying to preserve capital. If you take a look at semiconductor index or the stocks, we have not been able to bounce as high as the Qs, which is a little bit of a concern. We're simply getting above the 50-day right now. We are at the 50% retracement level. This is not a Fibonacci retracement. It's just a 50% mathematical retracement. And that is a little bit of a concern because semiconductors led to the upside and led to the downside. I would have loved to have seen the semiconductor index rally or bounce more than the Qs. So that's something to watch out for. And I did want to just kind of quickly comment in the finance X/Twitterverse, Substack, Reddit universe. It just seems like everyone now is on the bull side of the camp. That's a dangerous place to be when everyone is telling you to go long. Look, I've just been doing this too long to just know that that's usually a bad sign. Take a look at the volume today. So the SPY ETF had 54 million shares traded versus the average daily volume of 75 million. So below average. Looking at the Qs on a very strong day, we had 37 million shares trade today with an average volume of 48 million shares, so below average. Microsoft was up strong on volume of 29 million shares, but the average volume is 24, so it's above average there, but not like 1.5 times daily average. And Apple was down, and we had almost double average daily volume. So these are trends I don't want to see, right? Like I want to see up moves double the average volume, not only the down moves. So that's something that a nuance that I'm watching closely. Looking at profitable companies in the NASDAQ making new highs on a very strong day, we only had 7 names. That link is available for premium subscribers. Let's cover what was strong and what was weak in the S&P and NASDAQ.
We can't forget that this is just a small taste of the in-depth analysis that Not Your Advisor provides. They don't just throw numbers at you. They connect the dots, find those hidden trends, and help you understand what's driving the markets.
If you want the full picture, you got to check out the full Not Your Advisor episode.
Don't forget to subscribe to notyouradvisor.com.
And all their premium content. I mean, it's like having a direct line to what's really going on in the market.
It is. It really is. They cut through all the BS and give you the kind of info that you just won't find anywhere else.
Think about this. Investing is all about making decisions that work for you and your goals. You're the one in control.
Not Your Advisor can give you the map, but you choose where you want to go.
And with that empowering thought, we'll sign off. Happy investing.
Stand clear of the closing doors, please.